Me.
Okay, so welcome everybody to today's event, International Trade between UK and EU 10 months on, Perspectives, Issues and Practicalities. I want to say thank you firstly to Cowgills, Morison Global's newest UK member firm, for initiating this event. We love to see this kind of member collaboration. Before I welcome our panelists, I just have a few housekeeping rules. Could you all please mute yourselves now and remain muted? And if you have a question, please use the chat functionality, or you can raise your hand. Okay, it's now my pleasure to welcome Gemma McCaldon-Gower, who is an indirect tax specialist at UK member from Cowgills. Gemma has worked in the field of indirect tax for more than 15 years, starting her career as an officer with HM Revenue and Customs. She has a wide range of experience, with a particular interest in VAT and international trade and the complexities it can bring. Isabel Strecker-Hazan is partner and head of the International Business Service Department at Apotec in France, specializing in services to overseas companies. She works very closely with clients, providing them with accounting, management reporting, tax compliance, and global tax mobility. Isabel is also a member of the Morison Global European Board. I would also like to acknowledge Isabel's colleague, Geraldine Benquet, who has been working with Isabel to provide her expertise from a French perspective. Next, we have Kemal Akar. He is a CPA, member of the Dutch Professional Association of Accountants, and one of the partners of the Dutch member firm of Morison Global, Hulkenblock. Kemal heads up one of the accounting departments, and his client portfolio consists largely of international operating companies. And last but not least, is Kemal's colleague, Albert de Jager. He is a tax advisor and member of the Dutch Association of Tax Advisors. Albert heads the tax department of Hulkenblock and is heavily involved in advising in the field of international VAT and tax and social security issues relating to the global mobility of employees. Okay, thank you. Now over to you, Gemma.
Okay, so good morning, everyone. Thanks so much for joining us. It's been a bit of a hectic morning for me. So anyone who lives in the Manchester area or around that area will know there's been absolute chaos on the roads. So I've not made it into the office. I'm currently sat in a retail park in my car doing the webinar. So I apologise for any background noise or if you see people walking behind or anything like that. So I'm really sorry about that. We're just going to try and plough on and give you the best webinar that we can. Like I say, I'm absolutely delighted to be here. We're one of the newest members to Morison Global, and I'm delighted that our panelists have been able to join us to give us a bit of an overview of what's happening. You know, from the UK side, we know what's been happening with Brexit, and we know how much of an impact that's had on businesses in the UK. But I really thought it was important to get a flavour from what's been happening overseas, and I'm really delighted our colleagues have been able to join us and give us that insight. So my glamorous assistant Claire is going to be moving the slides for me. So again, we're going to try and make it go like clockwork, but if it doesn't, I really apologise for that. So we've just got a short presentation just really to discuss what's been happening on the international trade. So next slide, please, Claire. So basically, we're just going to cover a couple of things in the next 10-15 minutes. So the impact of Brexit on businesses in the UK. Any business in the UK will be well aware of that, but I appreciate that there might be some people from overseas who might not have quite appreciated how much of a big impact it's had on UK businesses. Having said that, there has been a couple of things that have gone quite well. So we're going to touch on those things and say, you know, how the government has actually stepped up in this area where it's been a lot of uncertainty. We've also seen a lot of issues. So what we want to do is draw on some of those and make sure that our people who are here, our clients and contacts, understand the issues that we're seeing in practice and how that we may be able to help them with any of those issues that they might have encountered. We're then going to have a panel discussion. So we're really fortunate to have had some great experts in their field on the call. So obviously we're going to probe them and see if they can help us with some of the specific issues that we've seen. And then if you've got any questions, then please do raise them. And we'll probably wait until the end of the session to get through those. But if you have any specific questions for any of the panel members, please just let us know and we'll get to as many of them as we can. Okay, so, thank you, Claire. That was so smooth. And so how has Brexit impacted a business in the UK? So HMRC's own statistics have told us that Brexit trade barriers have added around about 600 million in costs to importers. That is a massive, massive amount of money to businesses in the UK, and that's just a byproduct of doing trade with the EU. Customs duties paid by UK businesses have gone up from 1.6 billion in the same period to 2.2 billion in the first 7 months of 2021. So that is sheer duty on imports from the EU. So you can see how businesses have been impacted by Brexit and the trade agreements that we've made there. Again, this reflects only customs duty. So this is where there's duty paid on imports into the UK and doesn't take into account any other indirect costs. So cost of admin, or having to spend more time doing your VAT return, or having to employ advisors to help you get your strategy right, or costs of registering overseas, and any other costs that there might be there. Obviously, smaller businesses have been disproportionately hit by taxes and tariff rises. So some of the smaller players in the market don't have the market power to be able to go back and push back on maybe different Incoterms that suppliers or customers might be demanding from them. So they're seeing it much more hard hit. And also, you know, sector wise, we're seeing a lot of issues in the food and drink sector. As you can imagine, it's been difficult for people to get goods into the UK and obviously sell goods back into the EU, because we've had a catalogue of issues in the sector, you know, with transport, with Brexit, you know, there's less movement of people. And also we've had issues with COVID and actually physically getting goods moving across the border. Next slide, please. Thank you. So I don't want to be all doom and gloom. So what's gone well? So in the UK, HMRC did bring in some temporary reliefs and some, sorry, I'm just going to move this out of the way so we can see what it says. So simplifications that have been brought in by HMRC include PIVA. So this is postponed import VAT accounting. That means that any imports from anywhere throughout the world can come into the UK now without you paying VAT on the border. So what happens is, instead of that, you pay VAT through your VAT return. So you charge it out to yourself and then recover it on the same return, which has been a real bonus. So it's meant that paperwork has gone a bit more smoothly, and obviously there's less cash flow impact on businesses. And HMRC also gave businesses additional time to submit some of the declarations that they needed to from HMRC, and that was welcome as well. Now, one of the reasons that was a big push for Brexit is the ability now for the UK to make its own VAT rules. So we're now able to iron out some of those anomalies that we've seen and create a more fair VAT system. So, you know, in the UK here, we've got, and throughout the EU, we've got a vast system of rules that were largely implemented during the 1970s. And that world is just totally different from the world that operates now. And some of those rules are archaic and really out of time. So, you know, we do need a bit of a shake up in VAT, and I know they're doing that separately in Europe as well. But now we've got the ability in the UK to be able to say, right, this is an important issue for us in the UK, so we're going to set our VAT rules accordingly. And I think that's one of the areas where we may see some changes in the coming future, as the government is able to then, you know, change its purse strings and change its fiscal issues there. We've had simplified customs duty rates. So some of the rates were a bit here, there and everywhere, and, you know, similar items weren't always taxed in the same way. Duties were a bit different. We've now got more simplified model across the board. So we had some changes where the percentages went down. But obviously the impact is that you still, if you didn't pay, you wouldn't have paid duty on goods coming in from the EU beforehand. So, and you are paying it now potentially. So it still is a cost, but obviously, you know, you might have actually benefited from goods that you brought in from non-EU. We also had a last minute sort of deal reached just before Christmas. So that meant that rules on origin. So if goods come from the EU and the origin is the EU, there's no duty charge on those. And similar from the UK, you know, it makes our imports to the EU a little bit cheaper if the goods are actually physically made in the UK. So they're the bits that have gone quite well. Unfortunately, we've seen a lot of issues in practice. You know, those of you will know that the deal wasn't done with the EU until very, very late. So it was the 23rd or the 24th of December that we finally got the rules around how we were going to operate in the EU. That gave businesses very, very, very little opportunity to plan properly and be able to put in structures that were good and long-term and efficient. We also had this promise that customs duty was going to be minimal and there was going to be no red tape after Brexit. This just has not happened. If anything, the red tape has increased. You know, there's more things that we need to do. There's more admin, there's more burden on businesses. There's also a vast amount of unintended VAT obligations. So businesses don't always understand Incoterms, for example, because for those of us who've only dealt with the EU, Incoterms wouldn't have been a factor. We might have had, you know, we might have discussed our Incoterms, but we may not have actually understood what that really meant. So businesses using either DDP or Ex Works Incoterms, so that's delivered, duty paid, or Ex Works, now have a vast amount of burden. So if you're a customer and you purchase goods from France, for example, under Ex Works, the obligations on you is that you are actually buying the goods in France and then shipping them to yourself. So you're making an export out of France. And some businesses and people haven't understood the implications of what they're doing there. It gives you a potential option, a potential opportunity to register in France. And there's obviously admin that goes around with that. But also, you know, there's other things there as well. You've got a complete export documentation and customs documentation to get the goods out of France and then into the UK here as well. So there's an absolute cost there as well as administrative burden. Also, some member states, you need a fiscal representative. So that means that someone who acts as your agent in that country and takes joint and several liability for any issues that you have there. So that comes with it, you know, quite a significant cost, and also it's quite a risk to both parties. So you need to be careful about understanding your obligations if you're still selling into the EU. And getting goods into the EU, you know, this has been well documented. You know, there's not days that go by where you don't see it on the news, and there's you know, newspaper articles about it. Moving goods between the UK and the EU has been an absolute nightmare. You know, this is, you know, as I said before, this isn't just a Brexit issue. It's a culmination of many different issues. But certain sectors have felt it particularly hard. So the food and drink sector, you know, we've seen here in the UK issues with pigs, and we've seen issues with getting chicken into the UK, you know, and some of it is, you know, some of the stories and the headlines that you see are quite laughable. But, you know, there's underlying huge issues here about supply chain issues and making sure things are running smoothly. And, you know, it's just something that wasn't foreseen, I think, by the government when they were putting these rules in place. We've also seen things like the building sector's been particularly hard hit as well. And we've seen building firms hiring huge warehouses and filling them full of bricks because they just don't know when their next delivery of bricks is coming from, and they don't want to hold up developments that they've got on. So we are seeing real life, you know, practical issues here in the UK. There's just a couple more here. Again, increased costs and red tape. It's something that we've all seen in practice. Additional paperwork, payment of import VAT and customs duty. You know, having to pay your advisors. Is my structure right? Can I do things a bit more efficiently? You know, all of those things are something that businesses might not have appreciated early doors. And then there's a whole point about Northern Ireland, which is probably a whole webinar on its own. For those businesses who operate in Northern Ireland or move goods from the UK into Northern Ireland or from Northern Ireland into the EU, they have got such a complex structure and such a complex set of rules that they need to understand. It really is. They can't possibly carry on with the rules as they are. So it's going to be very, very difficult to see how those situations are going to be resolved, and obviously, you know, keeping the political issues as well. When you take those into consideration, you can't see how they can be resolved. So, you know, it's for those businesses operating in and out of Northern Ireland, I particularly feel for you. So really now we just wanted to have a bit of a panel discussion. So like I say, we're really lucky to, fortunate to have so many of our, sorry. I'm sorry about that. I tried to do everything and make sure I was all, all set up. So I wanted to really ask our panel and get their views as well on how things have been going. So I firstly wanted to ask how it was going in the Netherlands and in France as well, how their clients and how their businesses were finding the post-Brexit world. You know, have you found a decreased appetite from your customers, from your clients for selling into the UK? Have they found any issues? And if any of them are still selling into the UK and have had UK VAT obligations, how have they found dealing with HMRC? Has there been any practicalities and any insights that you can give us there? So maybe we'll go to Isabel first.
Yes, of course. Yes, to answer your question, no, I don't think that Brexit reduced our clients' appetite for dealing with UK, but obviously it has made trading much more complicated. And first, I think it's important to point out that UK is one of the most important trading partner and one of the key markets for the French companies. And before Brexit, UK was France's sixth largest client and seventh largest supplier. And economists had estimated that the Brexit-related loss for French exporter could be between 2 and 4 billion euro, depending on a soft or hard Brexit. Fortunately, as you mentioned, the signing of the trading agreement on December 24 has made it possible to limit the impact of the Brexit for the French exporters, since now they can benefit from duties, import duties exemption based on the preferential origin. And also the French custom authorities have tried to limit the impact of the Brexit by recruiting more than 600 custom officers, and also by implementing what we call a smart border, which allows early clearance and also a pairing between the custom clearance declaration and the truck's registration plates. However, I would say that custom clearance formalities are still a complexity because of regulatory controls that can lead to samplings or in-depth physical inspection of goods. And in this case, the delays for clearing operation can be very significant. Yes, it's also quite complex for the French merchants because now they must register with the HMRC portal. Yes, they have also to estimate the different taxes that will be charged on their goods. And this also makes the communication to their customers a bit more difficult. We haven't heard from our clients about any difficulties while dealing with the HMRC portal. So I think maybe it's good news. Okay. Okay, so, but globally, yes, I don't think that there is a loss of appetite, but it's a bit more difficult.
Okay, so it's interesting, isn't it, that you've then needed all of these extra customs officers as well. So, you know, there's obviously extra burden your side in France as well. So that's interesting to hear, isn't it? Yeah. Albert and Kamal, do either of you have any experience?
Oh, I think the view is mixed. Some of our clients had no difficulties with exportation to the UK. from some others, we heard that they changed their trading streams, especially the trading in oil and chemical products. From two of our clients, I heard that they would change their trading streams from the UK to other European countries because it's more easier to sell their products at that countries. So I think it's a mixed view. And
你好，
这样我那个谁啊，我们这边做 forecast 是用另外一个 Excel file。
Sorry, Kamal, you were saying.
Yeah, we just interrupted one of the participants.
oh, it was one of the specifics.
Yeah.
Okay.
So it's quite mixed. Not significantly, but some clients did change their strategy, especially with exporting to the UK. So that's based on our experience with our clients.
Okay, thank you.
Yeah.
So businesses in the EU with EU VAT obligations are finding the transition and getting to grips with the rules quite challenging. So whilst the EU rules are broadly based on the EU VAT Directive, each country interprets the rules in their own way, and compliance varies country by country. So for example, in the UK, a business that has a VAT credit, so it's owed money by HMRC, is usually repaid within two weeks or so of filing the VAT return. But I know anecdotally the position in Italy is very different, where VAT credits can be offset against other taxes, and securing repayment if you're in a VAT credit position can take a long time. So I wanted to ask the panel whether there's any considerations and practical points that our UK businesses need to think about if they are considering setting up in your country. So are there things like frequency of VAT return submissions or rules on invoicing that we need to understand? Is there anything prominent there that is really different from here in the UK? So maybe we'll start with the Netherlands.
Yeah.
It's I think it's very important to look at each situation, depending on the case, what business it is, what kind of product it or services it concerns, and do that upfront, before you already are in the business, just to look what the best path is to avoid such thing as you described, like advance payments on VAT and having to wait for a decade to get the refund of the VAT that's been paid on clearance of goods. We have a very good and very solid system, but of course it depends on if the correct path has been followed. So there's kind of possibilities. We are sure of that will work out for UK entrepreneurs to do business in the Netherlands.
Okay.
Do
we need a fiscal rep for the UK? Would a UK non-established business need a fiscal rep in Netherlands?
There are two situations where a fiscal rep is mandatory. It's in the case of we call it an Article 23 license. That's I think more or less the same later in the discussion about the 42 system in France. So, and it's more or less the same like the PIVA, you call it in your introduction. So then you need in the Netherlands a fiscal representative, but it's not necessary. If you don't have a fiscal representative, then you can register yourself in the Netherlands and pay it in upfront and claim it back from the tax authorities. And it's also mandatory. We are involved in distance selling to consumers in the Netherlands. Then there's also a fiscal representative is necessary.
Okay, thank you. And Isabel, what about in France? Is there anything we need to think about if we're considering setting up business or setting up a VAT registration in France?
Yes, yes. Your question was about also the regularity of periodicity of VAT returns and conditions to get VAT refund. So in France, conditions for VAT refund will indeed depend of the VAT regime applied to the operator, and VAT refund claims are filed at the same time of the regular VAT returns. That is to say, mainly on a monthly basis for operators under the real regime, and by exception for the very small businesses under the simplified regime on a year-end basis. But this is not advisable for companies which are in a VAT credit balance position. So company can generally ask for the repayment of VAT on a monthly basis, and VAT will be repaid between 15 and 20 days after VAT returns are filed. However, I draw your attention to the fact that when it comes to a first VAT claim, or when the VAT claim concerns a very high amount of VAT, French tax authorities may request additional information, such as a list of invoices and also copies of the main invoices and information regarding the activity, to have a full understanding of the activity. And when there's this kind of request, the repayment of the VAT can be much longer. Okay. Also, regarding invoicing rules, yes, it's quite strict also in France. So you have to pay attention to a lot of mandatory information that need to be included in the invoices for the treatment of VAT, but also regarding payment terms. And penalties can be quite significant in France if you don't comply with this requirement. Okay. And maybe regarding also the obligation to appoint a tax representative, yes, it will be necessary, for example, in the case of sales under DTP in Cotam from UK and France, it will be necessary definitely now for the operator to appoint a tax rep in order to be able to be repaid of the VAT.
Okay, thank you very much. Thanks both for that one. The next sort of points I wanted to raise was about holding stock in the EU. So when the UK was part of the EU, it was frequent that businesses would hold stock either close to customers' premises, so they might have call off stock near a customer's premises, and this was to avoid delays in the supply chain and make sure that customers, to be more flexible around their customers. And also to manage cash flow. So post-Brexit, I wanted to understand whether there are any issues around holding stock in the EU. So in both of your jurisdictions then, I understand there's been a simplification brought in recently. So would we, if we're thinking about holding stock in the EU or in France or Netherlands near to one of our customers, do we still need a VAT registration, and are there any other implications that we need to think of for that?
Gemma, in the Netherlands, it's a registration is needed because there's from the UK an importation in the Netherlands, so the registration is needed. But when the call of stock is replaced from the Netherlands to Germany or something like that, then we can make use of the simplifications. It was from the beginning of 2020, I think so. I remember correct. And it's not necessary for registration in Germany, for example. But the importation in the EU registration in the Netherlands is mandatory.
Okay, thank you. Isabel?
Yes, yes, it could be interesting indeed to set up a warehouse in France close to the clients to be able to group together all imports and facilitate the delivery to the final clients. Since the EU simplification regime applied to call of stock no longer applies to UK operators, they will have to register in France for VAT purpose. In order to subject to VAT the domestic sale and also to recover the import VAT. However, a UK VAT registered business in France will be able also to benefit from the specific reverse charge device which is applied to import VAT. Okay, but in this case, to be able to benefit from this regime, it will be necessary to appoint a custom representative for the clearance formality with a valid, what you call a valid economic operator authorization with a special mentions custom simplification. And this requirement is made actually to have the same level of security as for European operators. Also, in order to benefit from this reverse charge device, which is an option in France, it's necessary to comply with several conditions in which the fact that the importer must have made at least 4 imports during the last 12 months. They must have a compliant system of information allowing to monitor the custom operations. They must also justify of the absence of infringement to the tax regulation and prove financial solvency. But these 4 conditions will disappear at the end of the year because this regime, which was an option, will be generalized to all the operators from the 1st of January 2022.
Okay, so what I'm drawing from that is it is still an option to be able to have that call off stock or to hold stock in the EU, but you need to plan it in advance and think about, you know, what you need to do before you just send the stock there because it might be unintended consequences. Yes,
of course. And there's also, I'm not a specialist in customs duties and clearance, but there's also possibility, understand, for example, so for the VAT with the reverse charge system, it's quite simple, in fact. But for the clearance of import duties, you can also, for example, apply for the what we call a domicile clearance system in the warehouse, for example. This kind of organization, which is a bit more sophisticated, can be discussed with a specialized custom advisor, for example, in France.
That was really helpful, thank you. And well, since we've both got 2 mobility experts on the call as well, I thought I'd ask about what are the other non-indirect tax things that we need to think about. So if we've got a warehouse in the EU somewhere and we've got staff there, for example, is there anything we need to think about regarding the staff? You know, if they're employed by us in the UK, is there anything we need to raise there? Just high level thoughts really, and also whether it would give us, if we have a warehouse in France or Netherlands, would that give us a permanent establishment for a business in the UK? So if you just give us a few comments on that, that would be really helpful.
Well, Gemma, it depends in the Netherlands on the double tax treaty between the UK and the Netherlands, but also on the multilateral instrument. But I think in the connection between the UK and the Netherlands, I think that if you're holding a stock in the Netherlands only for warehousing and for delivery in the Netherlands, I think it not creates a permanent establishment in the Netherlands. So if there's no permanent establishment in the Netherlands, there's also no tax obligation for the employer here in the Netherlands for his employees. But I think what's necessary in the Netherlands is a registration for the social security of the employees. So I think that's what the employer has to think about, is the registration for the social security of the employees.
Okay, Thank you. And what about in France, Isabel?
Yes, indeed. I think it's important on tax perspective to consider whether the house will create or not a permanent establishment for tax purpose. It's quite clear, according to French tax code, that a permanent establishment is deemed to exist when we have the following criteria. The existence of a business facility. This business facility must be fixed or permanent if you prefer, and it must have its own activity, which generally involves the presence of staff on site. However, there are some exceptions to this principle, especially when the facility is used strictly for the purpose of storing, display, or delivery of the goods belonging to the operator. So in this case, there is no permanent tax establishment. So if in the warehouse, the staff is only dedicated to logistic and all the commercial functions remain in the UK, there won't be a permanent tax establishment, so no payment of corporate income tax in France. However, there could be what we call a limited registration with the allocation of a company number in order to perform social security formalities, because if the staff works on a permanent basis in the warehouse, you will have to declare the company as an employer, and the relevant social administration for foreign companies is the URSSAF of Bahrain, and the URSSAF will, in this case, allocate an employer number and manage the payment of social contributions in France.
Okay, so what we're saying is, if that's an option that someone's considering, they need to really think about all of the wider implications and everything that could come along with that. It's not just as simple as we've got some stock and an employee. You know, they need to really think about how the structure in that.
Yeah.
Right, that's really useful. Thank you. So the next questions I've got are a bit technical, really. So they're a bit very specific. So, you know, we touched on Incoterms before, and we touched on businesses using either due to delivery paid Incoterms or ex works. So it was really a question about people understanding the obligations. So under DDP, if you're the seller of the goods, then you're deemed to be making an import into the country. So for example, if we import into France, we were making an import into that country and then making a domestic sale in France. So obviously that opens up a range of different issues and unintended obligations, which we touched on earlier. But I wanted to specifically ask the guys from France about a specific solution that's been found for DDP sales of DDP Incoterms into France and into the EU. And I wondered if the guys there can just give us an idea about how that solution works and whether it's legitimate, because I think when you originally look at it, it seems like it might not be quite right. So I just wondered if you can just run us through that a little bit, please.
Yes, so yes, you refer to the 42 customer regime. So yes, we can use in France a customer regime which is called 42, which allows, in the case of an import of goods which is made in a member state, which is not the final state of destination, meaning that the import is followed by an intra-community delivery to another member state. So it's possible to carry out the import free of VAT. And in this regime, actually, the VAT will be declared by the final purchaser upon receipt of the goods in his country, member state country, and under the reverse charge device. And finally, this regime is made to allow the final member state to recover directly the VAT. So this solution can be interesting if for an operator wishes to have a stock in one country and then make delivery to various clients located in other member states. because as the three benefits are, it simplifies the formalities. You don't have to pay the VAT, and it's also easier for clearance formality, because you don't have to have a specific transit ticket for the movement of goods in the EU.
So I think when we originally looked at this in the UK, a few of us thought it seemed a bit too good to be true. So we were waiting for there to be an issue there. I think that the main thing with this is you can't use it to import goods into France that stay in France. That's the main point, isn't it? They need to be taken out of France again. You need to make that intra-community supply once the goods are in France. So I think that's important, isn't it?
Or the entry point could be Belgium, for example, and then goods are shipped to France.
Yeah.
But the interest is to have a warehouse, a centralized warehouse in Europe, and then ship goods to various clients in Europe.
Okay. Yeah, it's just a really good option, isn't it? So for those businesses who still want to continue trading under DDP terms and might, maybe getting some pushback from customers, who are saying, we want you to continue to trade like that. There is an option there, isn't it? That doesn't mean they need to have a warehouse or something like that. That there is still something there they can consider.
Yeah.
Brilliant.
Okay.
And the next question I had was about so something that we've seen as well in the UK is one of the issues that people haven't really considered or given much consideration are supplies between corporate groups. So businesses that have a parent, sibling, or companies within the EU. So they might have a top co somewhere in the EU and then a sale to a sibling or a subsidiary here in the UK. So because it tends to not be very formalized, so it tends to just be, we've always done it this way, we send stock to the UK, we send stock to the Netherlands, Germany, wherever it happens to be. The legal position doesn't always support the commercial position. So I wanted to get the view of Albert and Kamal about what their recommendations are for UK businesses understanding what their obligations are in the Netherlands or the wider EU. What happens if the paperwork doesn't support the commercial reality? What should they do? How do they, do they need to correct the position? So for example, if we've got a subsidiary in the UK that buys goods from an EU top company or holding company, parent company, and we don't tend to look, the invoices aren't right in the way that we'd normally make them because they're intra-company, there's no legal agreement there. We're saying that the goods are sold on X Works, for example, but really, the importer is the UK company. What happens if the paperwork doesn't follow the commercial reality? What should we do about that?
No.
Can you hear us, Albert, come out?
Yeah.
My advice is to inform in the Netherlands about the exact VAT rules before you start trading in the Netherlands. In my opinion, the Dutch tax authorities are very practical. If something doesn't match with the reality, then you get always the opportunity to send the correct invoice, to make the paperwork correctly, etc. So that's.
Yeah, I think in the UK, they're not as practical as that. So, if the invoice is in the wrong name or you've got import VAT in the wrong entity, it can be very, very tricky to get that sorted and for someone to be able to recover that.
Yeah, also they're quite open for explaining and discuss what the actual situation is. Of course, and sometimes it's very difficult to comply with the rules because there might be some special occasions that the rules don't cover how to deal with that specific issue or a business. but there's also a possibility to discuss this upfront with the tax office. The main thought about that is that the tax authorities are not being put how do you call it, in a disadvantaged position. As long as there's no tax deviation or evasion or whatsoever. Yeah.
I think in the UK, pragmatic is not one word that we would normally use to describe HMRC. So I think you're really fortunate there.
Yeah, but again, it is very important just to determine upfront what the intentions are, and then of course follow the rules as best as possible. Absolutely.
Yeah, I think in the UK, I think we've seen, especially with corporate groups, that the paperwork just isn't there. You know, the commercial reality doesn't support the paperwork, which might have been drafted 10 or 15 years ago in some cases. You know, it just doesn't follow. So when HMRC ask for proof of who, you know, who's the importer of record, for example, and we might have said, oh, it's, you know, it's X Works, but actually we're down, the UK company is down as the importer of record, so nothing follows through. So it becomes really tricky to work out whose import VAT is it, who is the importer of record, which entity should be insuring the goods. It's, you know, it becomes quite tricky.
Yeah, absolutely. Of course, that's very important to jump up front, how to move forward, and also the income terms or the delivery terms are very important in this case as well, for sure.
Okay, thank you both. That was the end of the questions that I had for the panel, really. But does anyone have any other questions or any other key points to raise before we move on to our audience questions? No. Okay, so Claire, have you been looking? Have we got any questions from the audience?
Nothing's come through yet, but we can open it up to everyone if we, I think you get the hand, if you put your hand up on like the little icons, you'll be able to ask a question, then we'll unmute you to ask your question to the panel. Does anybody have any questions?
Anything about the weather? Anything about sport?
Well, Gemma, I will say two things then. Firstly, thank you very much. Eddie, I think Eddie Chan probably wins the location award from Hong Kong. Well done, Eddie,
brilliant.
from Hong Kong.
Yeah, thank you. Thanks, Eddie.
Second thing, I think that's fantastic, Gemma. You managed to do that, especially from your car.
I know. I can't believe someone hasn't, like, there's literally cars parked all around me now. So I was thinking someone's going to knock into me or put me off or something. But it's fine. Don't worry. It's
well done.
Centre trials, aren't they, these things? Okay. So if anyone's got any questions that they want to send to any of the panel privately, you know, please do. You'll have our details on the end of the presentation there, so you can send them either to me and I'll disseminate them to the group, or you can send them, you know, to me personally or to Claire, whose email address you'll have. But I suppose that the main thing that we wanted to get across here is the implications. You know, we are 10 months in and we're still seeing all of these issues with people, and not just businesses in the UK, businesses in the EU as well. So really just take a step back and say, where are the pinch points in our supply chain? Where are the areas that we've got risk? And look at those and say, right, how do we get a pragmatic solution to make sure that we can continue to trade? And as Isabel said before, the UK is one of the main countries that France trades with. So, you know, let's make sure that we can still continue to do that, and we don't just stop doing that because it's hard. You know, there are ways that we can get around it, and, you know, the DDP solution is really, really good and is helpful for businesses in the UK. So let's continue to talk about it and make sure that we've got a structure that works for us, and make sure that we can continue to trade with our, you know, nearest neighbours.
I just want to say, as Gemma said, we will be sending out a link to the recording and a copy of the slides. So if anybody does have any questions, you can direct them to me and we can filter them through to the panel. Okay.
If I may add something as from practice, you recognize quite some inquiries from UK companies, which we receive from our network, of course. Clients that struggle with the Brexit, where they have goods, clients in Europe, in the European continent. And there are quite some similar questions. They have logistic problems with moving the goods from UK to Europe through Netherlands. And they're quite similar. And perhaps your clients or from UK or maybe other countries as well, they do have the same questions, or is it typical Dutch? Because Dutch has, of course, a big harbor, a good, solid logistics company in the harbor of Rotterdam, which is often used as a distribution for all throughout Europe.
Yeah.
Are there other clients or members facing the same questions?
I think what we've found is that people have tried to keep the same structure that they had and then make changes to that, which isn't really ideal, you know. So I think at the start I think most people were advocating for having a VAT registration in Netherlands. That was, you know, the key thing that people were suggesting, because you're a really friendly bunch. You know, your government is easy to deal with. You know, you speak English really, really well. You know, so it's those things, that the practicalities. But people then sort of shied away from that and you know, were worried about making that step. So then we see that people have just kept, you know, they kept the stock in the UK and just continued to try and work around it. And you know, it's not practical in the medium to long term, really. So I think that we will see a lot more of that as we settle down into, right, this is our future now, this is the rest of our business.
Yeah.
You know, we'll need to make more longer term decisions. So I think that you are going to see more people influxing into the Netherlands, and also France as well, being our closest neighbour, to try and alleviate some of those issues that you've highlighted.
Okay, thanks for commenting.
Anything more from you, Isabel or Geraldine?
Yes, I think it's important to point out that operators must be very careful about, you are talking about the form, they must be very careful about the documents and the mentions on the documents, because when you have to treat an invoice for a bookkeeper, for example, when you have to treat an invoice in the bookkeeping, you need to have a look to the document, to the single administrative document, because you will think that since an import, and actually you will discover that the good was delivered through Belgium and then went to France, so there is no import VAT, but just intra-community VAT. So it's important to have a look to all the documentation and to fully understand the Incoterm and the logistic, the supply chain organization which was applied to the operation.
Yeah, and I totally agree with that. I think it's something that it's such a simple idea, isn't it? But there's so much that can go wrong when you don't fully understand what your Incoterms and what your responsibilities are in that supply chain. And it's something that we're trying to labour to our clients over, you know, all of the time. We're trying to get that across to them, that you need to appreciate that. So I think it's great that you've stressed that. So thank you.
Okay. Yes, and also I would like to add that since 2018, the government is more tolerant in France when there's some mistakes on the tax returns, and there was a specific law voted in that sense. So it's always possible to regularize a mistake on a spontaneous basis in France, and you can avoid penalties and also have an halving on the interest if you regularize. So it's important to say that, because as you said, there are going to be a lot of mistakes, I think.
Yeah, it must be nice to have a tolerant government. Ours isn't like that. Okay, well, if no one's got anything else to add and there's no more questions from the audience, it's probably a good time to wrap up. Sarah, do you have any other comments?
No comments from me. Just thank you so much, everyone, for joining, and thanks, Gemma, for doing this from your car.
I hope everyone liked the Eccles retail park.
Yeah.
Right, thank you so much, everyone. Like I say, if you have any questions or comments or feedback, then please let us know. What we want to do is get better at these things, and if you've got ideas or anything that you want to suggest for future webinars and seminars and things, that events that we can do, then please let us know. We're always willing to hear your feedback, and we appreciate it. So thank you so much, everyone.
Thanks for organizing. And
Thank you.
Thank you.
soon.
Thanks,
panel.
everyone.
Thank you.
Bye-bye.
Thank you. Bye.
Bye.